Hi everyone, today we're going to talk about 5 stocks that are down a huge amount, and these are 5 companies that have reported earnings this week, and the earnings have been taken negatively and the stocks are down quite a bit. Now there's actually 6 on this list, but it's always more catchy to put 5, but 4 of them are very similar companies anyway, and 4 of them are down because of one company that reported earnings this week. So we'll take a look. Starting with number 1, which is Intel. So I've got a few questions about this one. I think like the last kind of couple of earnings for Intel, it's not done well. The share price has been negative on a lot of their earnings recently, and every time they do report earnings and they go down, I think every earnings have kind of gone down like 10%. I get a few questions asking, is Intel a buy? Now for me personally, as you can see, it is down 9% in pre-market, nearly 10%. And if we do go to like the 52-week highs, which was around this April time, you can see that we are down nearly 18% on this company. Now, the problem I have with Intel is that I am more interested in finding or buying the stocks that are kind of disrupting Intel, which are the likes of AMD and Nvidia. Those are the sort of stocks that I'm more interested in than Intel. I look at Intel and I think this one is appealing more to like the value players out here. You look at the stock and it's a 12p ratio, which is obviously quite cheap. And as well as that, you are picking up a 2.5% dividend yield, which is obviously pretty nice as well. In fact, it'd probably be a bit higher after the drop. Now, my problem with Intel is that from a value point of view, if you did want to play this as a bit of a value investment, it's not too bad. The problem is for me is that it doesn't have that earnings and revenue growth that I like to see for investment. If I am playing an investment, I like to still have a investment that grows at least probably 5 to 10%. So even if I'm playing a value play, I still like to have quite high earnings and revenue growth. Something like an Airtel Africa. Airtel Africa was a stock that I played as a bit of a dividend stock, but it still had a lot of growth. Whereas the likes of Intel at the moment, I feel like has a lot of pressure on the earnings and the revenue, and that it's kind of at a point now where it's struggling a little bit to do that. And sure, a few people will say that it is going to turn it around. It will be a good investment for the long term. But for me, I like to see a company not having as much pressure from competition as what Intel is having right now. So for me, I can understand why people do play this one when you look at the P ratio, when you look at the dividend side you're picking up. It is attracting a lot of value investors. For me, I do not mind having a few value stocks, but for me, it has to have a little bit less competition that Intel has, and it still needs to be growing a little bit quicker than what Intel is, because I still, I wouldn't mind picking up that 2.5% dividend yield, but I'd like to have it a bit more of the revenue and profit growth than what Intel does have. So yeah, that's potentially why I've never bought Intel, but I understand why a lot of people do play it. I mean, there would be a point for me that if Intel got unbelievably cheap, if we're talking to the point of view where we're back down in this $40 range, then that would be a time potentially where I'd be a bit more interested to pick it up. But for me personally, it's not one that I'm picking up at the moment, and that's Intel. Number 2, covered it this week a little bit, which is PayPal. PayPal had another 5-6% dip yesterday, and overall it's been a bit of a bad week. You can see it's lost 10%. Over the last kind of year period, it has had a very good run, but since we've got to about July time, it's lost over 20% of its share price. Now, normally when I see a stock lose 20% of its share price, I'm start thinking, oh, that's actually quite tempting. And with PayPal, I look at PayPal and do think it is very tempting. The news why it is down is because people are getting a bit nervous about them buying Pinterest. Now, the potential that I have for this one and what I am waiting on is that if they do follow through and do buy Pinterest, which is still a very 50-50 if it does happen, then I think the share price will probably go even lower off that news, and that's what I'll probably wait for. But yeah, it has had a 20% dip. It has had still a very good year, but it is down a bit since July. And there is that kind of rotation through a bit of big market, big tech really right now. There is a few stocks that are rotating and downtrending a little bit cheaper, and PayPal is one of them. Now the thing is even though PayPal is down 20%, my problem is that it is still sitting at a 60p ratio, which is still quite high for me. That's the big thing that does put me off. And the thing is as well, it's had some good years that have really benefited it, and maybe the growth does slow down in the next coming few years as a lot of it has been dragged forward. So for me, with PayPal, yeah, it's a great company. It is on a 20% discount, but I would have to wait for it to be a little bit lower for me to consider buying it. I mean, look at the run that it has been on. The stock has gone up nearly 150%. So yeah, for me, it would have to break probably into that $100 range, 150 to $200 for me to be considering buying it. So for me personally, it still has to come down a little bit more for me to consider buying this one. But yeah, it is interesting. It's a great company that is starting to have a bit of a dip. Once again, would not blame me for buying this one, but for me, I want to see it go a little bit cheaper. Next up, the one that is down the most on this list, a 20% dip in pre-market, which is Snapchat. So Snapchat is down 20% after its earnings. Its earnings were, EPS was beat, revenue was a little bit weak, and I think that's what spooked the company. The thing is, what I didn't realise with Snapchat is that it's actually a 118 billion company. I didn't even realise it had gone up to that much, which is a lot. And I think now, realistically, I have no intentions of buying Snapchat. I think for me personally, there's better social media players out here. But the company has had a phenomenal last year. And I think that now that it's up that much, there's a bit of a reality check of that it needs to come down to a bit of a better valuation. They blamed a lot of it on the new iOS update from Apple. And obviously, when you think about that, that could affect a few more stocks that do rely on Apple. But yeah, for me personally, Snapchat is still, even on a 20% dip, is not a company that I would really be that interested in. But yeah, that because of the news, it has affected a few more companies. The few more companies that it affected was Twitter. You'll see Twitter actually fell off a lot more than that previously, and it's starting to put a bit more of a recovery in. Twitter for me, once again, is, I think there's better social media plays out here than Twitter. I know a few people do play that, but for me personally, there's a couple more that I am interested in Twitter. It also went into Facebook. Facebook is down 4% in pre-market. Altogether, it had nearly a 6% dip when it did come out, though. For me, I've had a few questions on Facebook. I've always said, in my opinion, Facebook is not an overvalued company. It's still, in my opinion, not a bad buy really. But for me, it's not as cheap as what it was. And I got asked that a while ago. I said Facebook for me is fair value, and somebody said, "Oh, it's still cheap." And if you push me, if it's a buy or a sell, it's definitely a buy. But I don't think it is dirt cheap as what it sometimes goes to. That's the big thing. And with Facebook at the moment, you can see that it has had a bit of a reality check, and it has pulled back slightly. So yeah, we're having a bit of a dip on Facebook. For me personally, like I said, it's not overvalued, but I just don't think it's as cheap as what it was. The times when it was cheap is probably around this sort of period, and definitely this period here. So I think that realistically for me, Facebook would have to either stay at this sort of valuation for a year, and then that would be definitely quite good, or if it was to drop into that $200 range, then that would be when I would say that if it gets around to these sort of prices again, that would be definitely where Facebook would be a buy for me. But I wouldn't blame you for buying this one. It is one of the cheaper big tech stocks out there at the moment. But personally for me, that's where I'd be interested in that one. And the last one is Pinterest. It hasn't really creeped into Pinterest. It's not really down that much really. It's been having a good week. So I think the big thing here is the kind of, oh, is this buyout actually going to happen, with the kind of combination of Snapchat and their earnings. So Pinterest isn't really down. That's why it hasn't really made the list really. Even though the year 6, that's why I still call it 5. But yeah, I guess that's just having a little bit of a correction from that point of view. But yeah, nothing serious with Pinterest compared to the rest of the stocks that are on this list. So yeah, those are 5 stocks that are down a little bit after their earnings. Like I said, for me personally, there's not really any that I potentially would buy at the moment, but the R5 that I'm watching very closely, because the R5 that if they keep going lower, especially the PayPal and the Facebook, those are the 2 that I'd be particularly interested in. If they do keep going a bit more down, that's where I'd be interested to actually start buying them. So I will keep an eye on them. But yeah, hope the video was a little bit useful, wanting to cover 5 different stocks that I don't really talk about that much on the channel as well. I know some of you guys don't really like it when I do kind of stick to just the stocks I own and want me to go out of the circle and talk about some new ones. So yeah, hopefully that video was a little bit useful, a little bit of a quick fire through these anyway. So yeah, I will see you on the next video.